started with those today. Had basically, I think it amounted to about an 8% move on Bitcoin. So that was obviously a good thing. So we'll just kind of break that down. What were the catalysts? Why did it happen? What were we expecting, essentially? This was obviously our previous top right here before the big dump at 52,675. So as soon as we broke through that top, that would basically trigger the market's stop losses for anyone that was short in this situation, or assuming that we put in a lower high right here. So, naturally we're going to see immediately a burst through those prices as the stops get hit. Those stop losses on a short position will be the equivalence of a buy. So that's going to force price action up to the upside. So now let's talk about what came after that. I want to break this down first and actually go to a shorter time frame and tell you exactly what I'm looking at here. So the way I'm seeing this right now is we are getting ready to actually flip this back over to bullish on the 4-hour. I just switched over to the 4-hour. You guys know, obviously, how I trade, how I determine trend, all that stuff. Part of the necessity for what I require to be in a bull trend on whatever time frame I'm looking at is, one, we need to be above the 200 simple and the 200 exponential. Two, obviously, we want the 8 and 21 cross to the upside and this to be green. Otherwise, essentially, we're just taking what amounts to a scalp trade. But in this case, also what needs to happen is the 200 exponential, the brighter blue down here, needs to be on top of the 200 simple. So we are actually about to cross the 200 exponential back above the 200 simple. And while the indicator oscillators are like at extremely high levels that are unsustainable, all that means is we need to go sideways and consolidate, or have like a small pullback to a, higher low, but that the trend is still intact, and essentially flipping back to bullish on the 4-hour time frame. So let's look at a couple of specific examples of why that's important and, what it looks like when it's not in that situation. For instance, here was the January 21st. Basically we came up here and we topped out at like 40K. We came back down, and then we'll see the 200 simple was on top of the 200 exponential here. We can zoom in a little bit. And then eventually, we actually never flipped them over bearish, like they never flipped over to red or pink, but we consolidated the 200 exponential below there for a while, started to find support on it, and then eventually here, we actually crossed them back to the upside, which by that point in time, obviously on a 4-hour long trending trade, we're at 47,000 by that time. So that was obviously bullish. Kept moving up here to about 58,000, and then we had a pullback back down to the 200 exponential and simple, and then the same thing happened again. The 200 exponential crossed below, 200 simple crossed above. We found support, continued to the upside. So what was that telling us? Well, this ended up being essentially what amounted to our 3 bearish divergence tops. So we had the initial top, then the second top, and then the third top, and that's what gave us our bearish divergence. But each time on the 4-hour, the 200 simple crossed above each of those times. So again, that's not telling you the trend is over. It's not telling you we've topped out. It's telling us that we're running out of momentum to the upside. So then once we broke down here from our third bearish divergence top, and we broke below the 200 exponential and simple, and then their slopes flipped to the downside, we'll notice something that happened right here that stopped us from getting bullish. The reason I did not get bullish on this push back up to the upside, and this looked like a bearish lower high to me, is because when we came back up, the 200 exponential was never able to get back on top of the 200 simple. So we'll see we have the brighter bluer one here that's kind of switching between the red and blue, and then we have like the kind of faded or darker blue here that's switching between like the pink or purple and blue. But the 200 exponential is not able to get back on top because we can't maintain it above price long enough. And then we actually end up selling off. And, from there, we go from 58,000 to about 28,000, lose about like 50% of our value. And then we'll notice what happens right here is after the sell-off, the 200 exponential, when we're violently selling off, is below. And then as we kind of start coming back up to the top, we actually flip the 200 exponential back over blue again here just for a second, and then continue to sell off. But the 200 exponential stays on top of the 200 simple. So it never gets completely bearish and tells us that the same way we were running out of momentum to the upside, this area here, once they cross over here, we're running out of momentum to the downside. So then obviously we were able to capitalize on that using the triple bullish divergence and then enter into a position back to the upside, which we were doing that based on the 4-hour, which was on the 821 cross. And then again, once we got on top of the 200 exponential and simple, flipped the slopes back over to the upside, we were extremely bullish throughout that move, took some profits along the way, and then obviously, topped out here, was able to basically sell the top, and then once again, let's notice what happened here. We see that weakness start to happen. The 200 simple is on top of the 200 exponential, telling us that while we haven't necessarily topped out yet, and you'll notice we end up putting in a higher high, but we have run out of momentum to the upside. So that's why the cross between the 200 exponential and simple is so important. And then we come up here, put in a lower high, it fails, we bounce around down here. And now what's happening now is we've actually gotten back on top of the 200 exponential and simple long enough that with that move we got today, that now the 200 exponential has moved up and is getting ready to cross to the upside above the 200 simple. And the truth is, because of the reactionary speed of the 200 exponential, basically, unless we got some crazy massive sell-off back down to 46K, the cross is going to happen regardless. So at this point in time, the cross is all but confirmed, which probably has a lot to do with why we got that aggressive move to the upside. Basically front running the cross on the 200 exponential and simple, and then obviously also in combination, that would be like the stop loss point. Anyone that didn't take profits on their short on the way down, or anyone that entered a short, assuming that we would top out back on the way up. Bear with me here for 1 second. Okay, yeah, so I'm going to turn on the drawing tools. This chart's a little bit dirty, but don't mind that. But essentially we had this descending channel that we were operating inside of, and then the measured move break of the channel from the bottom of the channel to the top of the channel. We got that. Obviously, we're able to capitalize on, it was a little over 14% move to the upside, 14 and some change. And then actually, in my situation, I actually got caught a little bit on this one. I wasn't necessarily short on this position, but I had taken profits on the majority of that position to the upside already. Assuming, or, basically, I don't want to say necessarily assuming, but based on my trading strategy and what I expect to happen, I was looking at the top right here, the measured move, obviously, which we just demonstrated, and then looking for, what amounted to a lower high. So I figured we would either top out at the 786 or potentially at the 886. So I had closed the majority of my position and then put actually in place my stop loss below the breakdown of the previous candle here when I went to bed, so that if it broke down from those levels, started taking out these candles up here, I would basically, the stop loss would take profits for me on the remainder of the position. Well, exactly what happened to the upside here, where the shorts got stopped out, my long position got stopped out as well. I basically had it at, I can't remember what it was at. It was like 50,575, I think. So it all but got taken out, basically to the dollar, which that's fine. It happens. I was forced to take profits. Never a bad thing. Yeah, it went down to 50,400, and I think I had my stop at 50,575. So now looking at this candle though, when I saw this candle afterwards and it sold off and then got picked back up here, that's actually a pretty bullish candle. Because we held support at the 886, sold off fairly violently, and then it got bought back up. The same way we saw this happen right here. This one's a little more indecision because we push up, we push down, and we're kind of not sure which way it's going to go. But we see here, we push up once, sell off, it gets bought back up to the fib level, and then we go sideways and then push up to the next fib level. Here we push up, and then again, and then here we push up again. So now what I'm paying attention to, if I was in this position still, I would be looking for, if we get a close on the 4-hour below either of these previous two candles. So while technically we have already done that right now, if I'm awake and trading actively, I'm going to wait and see if this candle closes below the previous highs of these candles. We take out those candles. That's the beginning of basically a pullback or consolidation. But in the event that I'm, asleep or something like that, and I do put a hard stop in place, I would potentially get the same situation happen where a wick could come down and take me out of that position, which that's fine. Again, we take profits along the way, lock in profits. I would rather miss out on, an extra few percent to the upside than end up, negative on a winning trade or giving up, a nice portion of my wins. So, but that is obviously, in my opinion, a big change with what's been going on here. Taking out this previous high here is obviously a good thing. Does not mean that we're necessarily going to go like crazy bullish on the market or anything like that, but we're seeing the beginning signs. We're seeing important things. Now, that what we want to pay attention to is, obviously, do we start showing bearishness in here? Do we continue up to the 1.236, the 1.5? Like, where would this potentially be topping out at? So that's the 4 hour for now. And obviously, based on the indicator oscillators, this is obviously blue. We're above the slope line. Looks very powerful. We avoided putting in any kind of bearish divergence, which is obviously key. We're inside of the bullish control zone. The Stochs are still moving up to the upside aggressively. That's good. So what we're paying attention to is when we do get the hard sell signal eventually, and when we come out of the bullish control zone, what happens at that point in time. But as for now, this basically just looks to me like we have a low here, we have a higher low here, and then when we come back on this pullback, we just want to see, basically a higher low after that, or something to that effect. So, but if we do the actual breakdown on this move from our bottom right here, we'll notice that this was obviously like trading very, very technically, which is what we always want to see. We want to see these charts trading extremely technically. And that's exactly what we see, because if we take our Fibonacci from the low down here at like 28,000 to the high right here on the initial push up to 52,800, when we sold back off, where do we come down to? Come down exactly to the 0.5 Fibonacci, which is obviously, let me pull this out a little more so it's a little more clear. We come down exactly to the 0.5, which is a 50%, pullback or, retracement of the move itself. So while we slightly underperform the measure move of the channel breakdown right here that we were expecting, we slightly overperform, well, not even slightly, we definitely overperform the move back to the upside now. So now what we're paying attention to is, is this still going to amount to an A, a B up here, and then a C pullback? Or was this already, or, ABC has already played out to some degree, and then now this is just the beginning of a new wave structure. So at this point in time, because this bottom right here is playing out so technically to the upside with that 0.5 or 50% pullback, that would amount to essentially what could be our wave 1 to the upside, our wave 2 to the downside, and then we want to see where are we likely to get our wave 3 to play out. So I'm going to go ahead and I'm going to pull off the green one now just to kind of clean this up a little bit. And then we're going to take a look at where we could potentially get, our next wave at. So if we have now, and it's important to look at this ahead of time because, yeah, it's definitely possible we just start selling off. We put in a lower high, and that's our market cycle, and that was just our high, and that was our lower high. This was just a little push up to stop out the shorts right here, get everybody bullish again, provide liquidity. That is 100% a possibility. But it's also a possibility this was a retracement, and now we're going to start another 5-wave structure to the upside. So we want to look at both those and see what's going on here. So now we're going to use this yellow Fibonacci to give us our extensions to the upside and see potentially, where our targets would amount to based on that. So if we have to look at our 5-wave structure here, what we're looking at is, if this is our 0 point down here, this is our wave 1 top right here. This is our wave 2 bottom right here. We want to see where's our 3 going to come down to, our 4, and then obviously our 5, so that we can basically put in place rough idea as to where we're going to go to, or targets, should this trend continue to the upside and remain bullish. So we already have obviously the 0, the 1, the 2. So we know when the 4 pulls back, no matter where it pulls back to, it cannot come down below the 1. So we can just put that in place at the 1 for now. And then we're going to look at our Fibonacci extension targets for where we're going to potentially move to the upside. Now we know obviously our next rule that we're going to pay attention to is, we know that wave 1 is already put in, so we can measure the length of wave 1. And we know that wave 2 is the retracement of wave 1, and that was a 50% retrace. And then we know that our wave 3 is often the longest, but never the shortest. So if we assume that the wave 3 is not going to be, the wave 1 is our initial move up here. So the wave 3 does not have to be longer than the 1. So the 1 could be the longest, the 3 could be in the middle, and then the 5 would have to be the shortest. It would have to be based on those rules. But it's possible, obviously, and typically the wave 3 or the wave 5 will typically be the longest. The wave 1 just gets us moving. The wave 2 is to put in a higher low. And then the wave 3 is the biggest wave. And then, wave 4 pullback. Sometimes you get a truncated wave 5, which is the longest. But oftentimes we'll see that our wave 3 is, in fact, our longest wave. But proportionately to the wave 1, we can see we had basically a $23,121 wave 1. So if we say roughly $23,150 would give us a wave 3 that is at least as long as wave 1. We can just put that down here. And then 23,150 is what we said. That would put us right around the 1.618 Fibonacci target, just shy of it basically. So let's put our wave 3 in place right here, assuming that will be our target. So that's going to be the 1.618, the 161.8% extension of the pullback itself. So we know the wave 1 was 21,150, let's say, and then we pulled back 50% of the move to the upside. So now our Fibonacci extension, the 1.618, is our favorite Fibonacci extension target, which is the extension of the actual pullback itself. And then that lines up again with the length of the wave 1. So that would give us a wave 1 that is shorter than the wave 3, and then the Fibonacci extension targets and everything line up. And then it would give us a pullback of our wave 3 right here. So we could, again, look at that and get a rough idea. Look for some symmetry right here from the top of wave 3. We'll just turn that one green for a minute. That would give us a bullish retracement almost perfectly. So the top of the wave 1 right here, the bottom of the wave 2 was a 50% pullback. And then for the wave 3 itself, this would be a 0.382% or 38% pullback of our wave 3 now, and then that's going to line up perfectly with our top from the wave 1 and the 4, so that we know the 4 can't pull back lower than the top of the 1 on a long time frame. Obviously, 4 hour or daily is 4 hours a little short. Daily or weekly or whatever is obviously a little more ideal. And then at that point in time, we can just figure out, where's our wave 5 potentially going to happen. So we would just do the same thing from the top of the wave 3 to the bottom of the wave 4. I'm just going to turn that one red. I'm going to go ahead and turn off the green one now. And then we can just sort of look at where we would potentially be topping out on this as well. So again, assuming we got basically, a 1.618% move at this point in time, because the 3 is longer than the 1, the 5 could be shorter or longer. So we could potentially have, our target up here at 71,000. We could potentially have our target up here at the 2.618, which would be 86,000. Any of these things are viable. We could pull up here exactly to the 1 and have a double top scenario play out. Any of those are possibilities. But in this case, I'm just going to put it at our favorite target, which is the 1.618, which would be a $71,000 Bitcoin. So definitely a possibility. Obviously at this point in time, the 4 hour is looking bullish, and we're very close to flipping over to bullish on the daily as well. And you could say, yeah, but we're already bullish. How can you not be bullish? What do you mean? This is obviously bullish. Everything's bullish. We're going to new highs. Well, the difference between you saying that and what I'm saying is, I'm using a predetermined set of criteria that I use over and over again that allows me to be consistently, continually profitable. It's measurable, it's repeatable, and it works. So the difference being, you could say right now, and I could say it, I could agree with you and say, this is very bullish. We're probably going to new all-time highs. But I trade a different way. I trade like a mechanic. I fix things when they're broken. I do the same thing over and over again. That way, I don't have user error involved. So that's why it's so key for me to have a predefined set of criteria and then base what I'm doing on that. So while I said here that we're about to get the cross of the 200 exponential above the 200 simple on the 4 hour, if we switch over now to a slightly longer time frame and we look at the daily, we'll see, same situation happen. 200 exponential crosses above the 200 simple. We go into a long uptrend, bull trend. 821 cross to the downside. We put in a lower high. That starts looking bearish, obviously. Break down below both of them on the daily. We still have the 200 simple slope to the upside this whole entire time, and then the 200 exponential loses the slope. When we get back above the 200 exponential, we start getting bullish here again, and then again we get on top of the both of them. They're both bullish right here, but we have other things giving us some red flags that we're potentially topping out. And then again, when we sell off back down here, find support at the 200 exponential, we're paying attention to basically a low and then a higher low, which is good. That's obviously the beginning of an uptrend. We spoke about that specifically. What we wanted to see after that was taking out this high. So now we have a low, then we have a high, then we have a higher low, and now we have a higher high, confirming that we are in fact in some form of an uptrend. And now the last thing we need to happen on the daily chart is, because of the slowness of the 200 simple moving average, it still has a negative slope right here. We can see it in pink, and the 200 exponential is below that. So in a short amount of time, a few days or weeks, this will have basically consolidated, moved to the upside, or had a pullback to the moving averages. But as long as we stay on top of the 200 simple moving average, as long as we're able to hold 45,000, this will look extremely bullish to me again, because the 200 exponential will move back to the upside, the 200 simple will level back out, and then we can go back into a, confirmed bull trend. And again, we have targets to the upside, we have expectations, we have criteria that's necessary. Obviously, you could argue that the moment we take out, depending on what time frame you're looking at, basically 64,000, we're in a blue sky breakout. So in a blue sky breakout, everyone that has ever bought Bitcoin is profitable. Therefore, there's no reason to sell. You're not just going to guess where the top's going to be and sell off your crypto. You're going to basically just wait until you start seeing signs from the market that we're potentially topping out. So that's how I'm looking at it. That's how I am currently viewing the price action, and why it's so important. That's my targets to the upside. That's my rationale for looking at it this way. Again, if we look at on the daily here, once the price action, the histogram is above the blue slope line, we know we are in a bullish uptrend, which is how we're able to capitalize on that move. And then again here we have the 821 crossing to the upside. We have the blue bullishness, the green histogram above the zero line, above the slope line. The slope line is blue. We're in the bullish control zone here. We are at very high levels currently. We are currently at 94 out of 100, which is where this maxes out. So it would not be unrealistic to think that we would put in some sort of topping pattern or temporary pullback at this point in time. But no reason to get bearish on any of this price action until we have a reason otherwise. But I am very close to just flipping over to once again being completely bullish in these markets. So, and again, if someone else has a different way that they are bullish or whatever based on technicals, that's completely fine. You can say, well, I was bullish way before you, so I was able to capitalize on more of the move. That's totally fine. That is 100% fine. I have no problem with people doing that. The most important thing is that whatever you're doing, that you're quantifying it and you're able to repeat it. That is literally, in my opinion, the only thing that matters. As long as you can consistently do the same thing over and over again, you could take out a piece of paper, write down your rules, and someone who has never done this before, has no idea, what your rules are or your trading strategy, can look at those rules, follow them, and be successful. That is the most important thing, in my opinion, to a trading strategy. So now we can look at essentially what I have here is a bullish channel to the upside. We have our low down here. We have our lows right here. We have our highs right here, where we have, obviously 2 touches on the bottom and at least, a couple touches on the top. You could argue this could be like slightly moved down, but something like that basically. At this point in time, what we're looking at is where we would potentially be topping out, which again, that would be the 1.618. I'm going to take... Yeah, I'll leave it on there for a second. I'm going to move this 3 over to here because that would be a touch to the top of the channel. That would be a touch to the 1.618, which is what we're paying attention to for our potential top. And when that might happen, somewhere around like October 13th, roughly. And then obviously for our pullback, if we're expecting the pullback here, we would move it over time-wise and assume that we would go into a consolidated like sideways or downtrend and touch the bottom of the channel. Again, this is not it doesn't have to be clockwork, but more often than not, we'll see that the more of these points we have in mind, the more confluence there is. And once we do actually put in a top or touch the top of the channel or something like that, we can then reevaluate, move these slightly. But again, we're using these are less reliable, but they're predictive. So when we get up here and all of a sudden we start looking like we're topping out, we already have a channel in play. We already have Fibonacci extension targets in play. We have an area in mind that we are expecting price action to top out in, so that we're not surprised if all of a sudden it happens and it's not, you know, you don't get caught with your pants down while you're sleeping or while you're out and about or something like that. And then you have to reactionary make a move based on, you know, emotions of what's happening in the market. We have predetermined area that we're paying attention to and potential topping area. We have predetermined, you know, where we would expect that to top out, where we would expect it then to bottom out. And then we have invalidation in mind as well. So obviously, if this fails and starts to sell off and we take out this low right here, that would invalidate our uptrend, as now we would have put in a higher high, but we would put in a lower low. So that could start messing with things. You know, obviously, if this rolled over after we move up here and then pulls back lower than the previous high right here at 52,800, we know we have invalidated the Fibonacci targets as well, because we can't have the 4 retrace less than the 1. If we have this underperform, then we know after that no matter what happens, we know the wave 5 cannot be longer than the wave 3, because that would make the wave 3 the shortest wave. So we have a bunch of different rules and different measurable, quantifiable things happening that we can then look back on, you know, so that we're expecting certain things to happen. And then if those things don't happen, or if they do happen, you know, we already have planned out, mapped out a sort of like, you know, destination for where crypto or Bitcoin might be going. So that is what I'm looking at with Bitcoin right now. That's what I'm paying attention to, the most important levels. As far as I am concerned right now, though, I'm about 75% bullish, let's say, on Bitcoin, on crypto, on the daily, based on my indicator oscillators. Obviously, this one is completely bullish. This one is now completely bullish. And then based on our moving averages, oh, wrong one. Based on the moving averages, like we discussed here, the majority of the criteria have been met. We now have a blue slope on the 200 exponential. We do still have a red slope on the 200 simple, but we're above that. So all we have to do is maintain price action and it will flip. We have the 8 and 21 flip to the upside in green right here. So that is obviously bullish. And then finally, we just need the 200 exponential on top of the 200 simple. So as far as I'm concerned, I'm over 75% bullish. You know, basically using these 3 indicators on Bitcoin's price action. If we were to take out the high right here, obviously, you know, that would probably line up with around the same amount of time. But we have to be very careful on what's happening now. You guys will notice that I displayed like the, you know, Wall Street cheat sheet thumbnail for our video today. And, you know, this is what a lower high, you know, complacency rally looks like. You know, we come up here, we put in a high, we have a sell-off. We consolidate and start creeping up near the highs again, and then we put in a lower high and sell off. So that is the reason that I'm not 100% bullish right now. You know, you could ask me in my heart, in my feelings, in my gut, what do I think is going to happen? You know, what's the percentage probability that we go to new highs? I could tell you all that stuff, but it would mean absolutely nothing. You know, you could argue that maybe your gut feeling after trading for years or doing tens of thousands of hours of technical analysis means something. Sure, but it's not quantifiable. I can't tell you on a piece of paper, I can't write for you on a trading plan, you know, the feeling that you're going to feel when you just know inside your heart and your mind that Bitcoin is going to new highs. I can't do that. I can't quantify that for you. What I can quantify is my very strict trading criteria that I have just done. So hopefully that is useful for you guys. Anyone using the TJD Master, obviously this is exponentially more valuable to you because you can use all 3 of these indicators exactly as I have them displayed here. So that is our Bitcoin technical analysis for today. If you are just tuning in, or if this is just an excerpt, I would like to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Just going to jump over in the comment section real quick, as I see you guys are active, and I like to always encourage that type of behavior, as I do appreciate the engagements. And then we're actually going to look at something else here. I'm going to look at the futures chart briefly. I will look at another Bitcoin chart I have, but most importantly right now, what I'm really paying attention to is our Bitcoin dominance and our crypto cap, because there's something big happening over there that we've been discussing, expecting, and it's playing out perfectly right now. So let me jump in the comments and say what's up to you guys, and then we'll get rolling. Oh, and bear with me here as my eye is acting up today, so everything's just a little bit blurry there. What's going on, Al? Hello, do you do any buy, sell signals? I mean, I do technical analysis and lay out a lot of trade setups, like in the live streams, but I only do them twice a week. I do have a paid private group that gives you access to the TJD master, which is this indicator right here, proprietary indicator I use. All the rest of the indicators are actually free. So, you know, in that group, I lay out trade setups real time, and then obviously do like technical analysis, display charts, and everything like that. So that's where you're going to get like the signals, is in the paid Discord group. But not, I don't use like social media otherwise. So I'm not like on Twitter, like buy here, sell here. But I do display like my actual trade setups, targets, stop losses, and then specific justifications. Because in the end, I'm not here to tell anyone when to buy or sell. As a matter of fact, I don't do that at all. This is not financial advice. I'm not telling anyone how to win or lose. What I'm doing is telling you what I'm doing and why I'm doing it, so that you can learn to do it for yourself and eventually become self-sufficient. Because in my opinion, that's the most important thing. So I'm really here to teach, and most of the people that are involved are here to learn, obviously. So where to set buy order if we have some pullback? Yeah, I mean, I just went over all that, obviously, Al, in great depth. Consider to answer questions from your 4 viewers. Yeah, I do. But I don't just stop every time somebody asks a question. I do technical analysis, and then I take short breaks and answer questions. So thank you. Honkiness literally just said the same thing. He answers when he takes a break. Al says, thank you, da da da. I'm obviously behind on this for a minute there, but what is going on? Fit Shatter. Dude, Crypto Trend Trader is giving a detailed analysis, the best out there, and he'll come look at the chat when he takes a break. Yeah, see, you can tell who's here regularly, knows what's going on. So welcome, Al, for the first time. Glad to have you, my friend. Yeah, I do it pretty structured, man. I basically do like, you know, 15 to 30 minutes, sometimes an hour, depending on what's going on whatever I'm talking about. And then I'll take a couple minutes, and then I'll usually take like a short break. I typically try to keep the live streams between roughly 2 and 3 hours. And then throughout the week, I will do excerpts where I just post specific assets or whatever. You know, obviously, while there's a bunch of stuff going on in the markets or whatever, I understand everybody gets a little, you know, eager or whatever. But the important thing, and what I really try to do here, is lay out what I'm expecting to happen in a bearish or bullish scenario, and then explain to you guys, you know, on different assets, why I'm looking at something a certain way. And then the more time you hang around for, the more you watch what I'm doing, the more you'll see that I literally do the same thing over and over again. And once you to learn how to do it, you know, you're just adding like tools to your utility belt. And again, the main goal is to make you guys completely self-sufficient and able to trade for yourself, to understand, you know, all the like hundreds of thousands of hours I've put into, you know, not only like the indicators, the trading strategy, like, you know, everything here, so that you can do, you know, the goal for everybody, I think, that's into like trading or investing or whatever, is to become self-sufficient. I think that's everyone's goal, to eventually say, F the man, quit your job, and do this full time by yourself. So that's what I'm going for. I'm trying to help people to learn how to do that as best I can, but obviously not giving you guys financial advice or anything. If you listen to me, I'm sure you'll just lose all your money. So here we got the Coinbase chart, and then I'm going to go through, we'll look at futures next. Coinbase chart here on the daily, we can see basically our traditional stochastic is, I mean, we're at the topping levels here. You know, this is like 100. It obviously maxes out at 100. So, you know, you can see quite a few times we came up to the top, topped out, and then bounced back up again. So it doesn't just necessarily mean we have to like sell off extremely bearish. As far as a pullback goes, if we get just like some small little itsy bitsy pullback, I think it's realistic to think that our previous top right here at 52,700 would act as support on a pullback, or slightly higher, which would be that Fibonacci retracement. So and then here on the MACD, we see we have quite a bit of momentum to the upside, consistently putting in larger bars. That is good. That means we are moving powerfully in a trend to the upside, at least for now. And then finally our RSI here as well. You know, we made it up to like the 70 level. Oh, you know what? This is just, yeah, because this is the standard RSI. It doesn't have my settings on it. I typically use like the 80 area as my own. I look at 80 and 90. So, you know, RSI basically topping out at like the 70. but there's still plenty of room to run to the upside. And just a little like peak like this doesn't mean we can't just put in a higher peak right afterwards, or, you know, turn it back around and continue to the upside. Matter of fact, there's quite a few examples just right here, you know, where we came up here, peaked, and then go higher right afterwards, peaked, and then go higher right afterwards, peaked, and then go higher right afterwards. So I'm not like getting extremely bearish or anything on these things, but I am paying attention to these levels. We were able to invalidate any of the potential bearish divergence, which was obviously good. We were able to take out the previous high, which was obviously good. And so far, momentum is in our favor as well. So, and then if we look at our futures chart, once again, we see a slightly different signature taking place on our indicator oscillators, which is very important because we were discussing this the entire time, how we actually had stayed above the 200 exponential and simple with the slope to the upside. So while now we have already fulfilled one additional criteria on the Bitcoin futures chart, we have the 821 cross to the upside. We're on top of the 200 simple. We're on top of the 200 exponential. Both have a slope to the upside. The one thing we're missing right here is the 200 exponential is not above the 200 simple. So typically this is how markets top out. The 200 simple is above the 200 exponential. We want it to be the 200 exponential above the 200 simple because that means momentum is in our favor. And then we see obviously here, we are preparing to enter into the bullish control zone. The knife is at kind of a high level here, but with a powerful move like that, we would expect that to happen. And then obviously very importantly as well, we have all green histograms above the zero line, above the slope line, and we have maintained the blue slope line, which oftentimes this will not be the case. Most of the time when we break down below and the slope line remains blue, when we come back up to it, it will fail. In this case, obviously right here, we were able to do it, but we didn't break down far from it. Here, it flipped over red slightly, and then we were able to get back on top of it. And then here, we actually were able to get back on top of it, but then it failed almost immediately afterwards. So, you know, in this case, obviously, that amounted to a top. So again, we need to be careful, but as long as this momentum stays to the upside and we keep moving here, you know, it won't take long for this 200 exponential to get back on top. So definitely seeing some signs of strength that are important in these markets. But, you know, it's nothing unexpected. We did overperform the initial move that we were expecting right here. But, you know, there's nothing wrong with that. That's obviously a good thing. I have said, you know, probably 1,000 times that I would rather take profits too soon than not take profits and turn a winner into a loser or give back, you know, what could have been locked in. So let's jump over. I'm going to skip through the altcoins real quick and then we'll come back to them. I want to talk about Bitcoin dominance. So this is something that we've been paying attention to and discussing quite a bit on the channel and then also in the group as well. Shout out to my boy Bill. We were discussing actually this bottom right here and what's been going on here. So I have been comparing this price action and what I was expecting to happen to this previous price action here as well. And this was our 2018 top, which was really, it was the 2017 top in Bitcoin, but altcoins ran quite a bit higher. So Bitcoin dominance went down because the altcoins continued to run while Bitcoin went sideways. So that made this chart go down. Obviously, Bitcoin was losing market cap dominance. And then we came back up, failed to cross the 821 back to the upside. And then we came down and we put in a higher low. You know, and then obviously Bitcoin gained a bunch of momentum as the markets topped out and the altcoins basically went, you know, parabolic to the downside. But Bitcoin went down, but less, if that makes sense. And now here we have obviously still in a powerful downtrend as we're below the 200 exponential and simple. Oh, and this is also on the weekly chart, not the daily. I like to look at this on longer time frames. We'll see here we came down and put in our low right here on the Bitcoin dominance in May. And then we came down and retested it right here in September. So we put in actually a slightly lower low, and it's tough to tell. They look really close, and I know the volume's probably blocking it, but this one is slightly lower than this one here. And then if we look at our indicator oscillators, when we came down here, we have a low on our blue right here, and then now we have a low, a higher low, potentially, on the blue right here. And then again, we have obviously a switch between the red and green histogram. That was corresponding with our lows here. And then now we have flipped a couple red and then back to green here. So now we have a higher low. So we basically have bullish divergence between these 2 points and our 2 indicator oscillators. So again, sometimes you'll put in a third drive of divergence. It is possible we come back down and take that out, but we were expecting one of 2 situations to happen and had been discussing it, which is partially why this is not a surprise that we got a violent move in Bitcoin. And like the video says, Bitcoin finally got its nut, but left the altcoins behind or at the altcoins expenses, because we see here a big green candle in the market cap dominance for Bitcoin, but we see that 90% of the altcoins barely moved at all. As a matter of fact, many of them were down today. So the real question is, where did all the money come from? Is it new money flowing into the space? And the answer to that question is no, it's not new money flowing into the space. It's money flowing out of all the shit coins back into Bitcoin, telling us that probably people think either the shit coins have topped or there was like a concerted effort between the whales to use some of their gains to push Bitcoin higher so that the bull run could continue. Either of those is acceptable. The alternative situation, which we know now is not what happened, would be Bitcoin starts to sell off and then the altcoins sell off more violently. So Bitcoin's market cap dominance goes up as all the cryptos go down. But we know from our last few times when we had sell-offs that most of the shitcoins have been selling off around the same as Bitcoin. There's no reason at this point in time. People aren't afraid of being stuck in shitcoins going into a bear market. So they're not afraid that they're going to go down 90-something% when Bitcoin drops like 50 or 60 or 70. So right now, everyone is super confident with all their like trash bag altcoins. So no one is fleeing from them as they like go bust or projects disappear or they sell off exponentially worse than Bitcoin. So we're seeing something that happens in like the euphoria stage, which is something else that has me like, a little cautiously ambitious about this move to the upside. Because what I would expect to happen at the end of a bull cycle is once the altcoins have run, many of them have put in new highs after Bitcoin has, and then eventually those people, those investors, whales, whatever, they're going to take their money out of all these shitcoins that they've been making gains on, and then they're going to move that back into Bitcoin because they want to actually have Bitcoin. They're just using the shitcoins as, a vehicle to make exponential gains, because we all know that typically shitcoins will move up and down with a higher volatility. So, and now if we just zoom in this chart here, I do want to look at it on, obviously we made it back up to the 21 right here. It is possible we get a similar rejection like this. But at this point in time with the bullish divergence, basically just a weekly close somewhere around like 45.5. And if we can hold that level, if this crosses back to the upside, it's going to tell us Bitcoin is going into, a micro uptrend inside of the macro downtrend. So if that was the case, once again, one of two situations is happening. Bitcoin is going parabolic and the alts are moving to the upside, sideways, or down while this happens. But regardless, Bitcoin is moving higher faster, proportionately to the alts, or we're getting a sell-off and Bitcoin is maintaining its value much better than the altcoins as they sell off more violently. So either one of those situations, once again, is possible. And again, this is the exact situation we had play out with the gold-silver chart. When everyone else was extremely bullish on gold and silver as it looked like they were getting ready to break out to new highs, we looked at the gold-silver ratio, and that chart was able to give us the answer. Were we going to be going higher or were we going to be going lower? And the answer ended up being correct, obviously, as what happened was gold started to sell off and silver started to sell off more violently. Therefore, the gold-silver ratio was going up. So that's very similar to what we see happening on Bitcoin. So now here on the daily, we see the 821 have crossed to the downside, to the upside right here. And now we're coming up here to retest the 200 exponential and simple. And now what's happening with our momentum? Remember, our blue 200 exponential is the red when it's in a downtrend. So as long as that is below the 200 simple, which is the like pink, we know that we're gaining strength or momentum to the downside. So now here, once we got this cross right here between the 200 exponential and simple, now the 200 exponential is on top. So that is telling us that we are actually losing momentum to the downside. So what does that say? Well, we have likely bottomed on this chart, at least for now. It is possible we come down here and put in a lower low, but the likelihood is that this move is done to the downside, and that now Bitcoin will continue to gain strength compared to altcoins. And then if we just look at this on the daily, we can see here once again, this was our low on the daily. We have a slightly higher low here on the daily. So we don't have the same divergence signal showing up on the daily, more so on the weekly, but we are inside the bullish control zone. We are coming up to retest these. The 200s are losing strength to the downside. We have a blue slope line to the upside, all green histograms, and we're above the zero line. So that tells us more than likely we will see the remainder of this move and, a cross back up to our target around roughly like 47%, at which point in time, we have quite a bit of resistance from these previous points as well. So it's not unrealistic to think that we move up to like 47 or 48 and then see at least like a temporary top on this. So, but this is a very important chart, and this Bitcoin dominance chart was able to actually let us know what was likely going to happen in this situation. So I'm still cautiously optimistic on the Bitcoin price action that we've seen, but now you guys know my exact rationale. So now what is the other way that we can tell, basically like hidden secrets of the market? Well, let's take a look at our total market cap and see what is this chart telling us. Well, when we got our high back here, that was when Bitcoin topped out in May, and the altcoins, and then they got the violent sell-off, 50% sell-off, etc. We consolidated, we got our bullish divergence that played out, triple bullish divergence came up here, and now what happened when that happened? We have the high right here, and then when we came up here on the weekly chart, we'll notice that Bitcoin did not even come near to its high, and some, but not many, of the altcoins put in new all-time highs. So we had things like Cardano, we had Solana, we had many other shitcoins come up and put in new all-time highs. So the money that went into those and the value created by those price rises moved the total market cap back up to, basically those same levels. And keep in mind, that does not mean that, an extra $1 trillion flowed into crypto in that time. It just means that if you take the market cap of each of those coins, it ended up at the same level. So if you have some kind of shit coin like Cardano, let's say, and all of a sudden it goes from $2 to $3, the market cap on Cardano goes up by 50%. Because all it does, market cap is only calculated by taking the most recent price, which at the time was $3, and then multiplying it by the total shitcoins in existence. So it does not mean that whatever Cardano's market cap is how much money flowed into Cardano, nor does it mean that it would ever be possible for that amount of market cap to be extracted from Cardano, because the selling would drive down the price. So imagine, hypothetically, you have a situation where there's only 10 of a certain crypto in existence, and all 10 of those crypto were sold, and someone has them, and the last price they traded for was $10. The total market cap of that crypto is then $100, because it's the last price sold for, $10, times the total supply, which is 10, so it's $100. So if one person then sells that coin, that 1 in 10 coin that we have, but will only sell it for $100 now, and no one else will sell at any lower price than that. If someone steps in and buys that coin for $100, now all the other coins based on the market cap are technically worth $100 each. So now you have 10 coins at $100, giving you a total market cap of $1,000. So that extra $100 that was purchased that last coin for made the entire market cap go up from a total of $100 market cap to a total of $1,000 market cap. So $100 10x the market cap when the market cap was already $100. So it's a rather skewed way of calculating things and can be like a little confusing to people at times. So it is important to understand that this is not always the most accurate to look at on its own. But what we see here now is when that topped out basically around the same level again, and very few things put in a new all-time high, we didn't see necessarily that extra whatever $1 trillion flow into crypto. We just saw that calculation give us essentially a same top here. And now here we have sold off again to a higher low, and now we've come up once again to that same high. But this time, almost none of the cryptos are at new all-time highs. Bitcoin is not at a new all-time high, and yet somehow we're essentially retesting those same levels once again. So again, we have to be very careful with how we look at these things. But what is this telling us? Well, technically on the weekly, we have a high, we have a slightly lower high, and then we're still slightly lower now. So wherever this weekly close at, we want to see, do we get some kind of divergence? Does it look good? Essentially the oscillator so far looks decent. We're above the slope line. We have green histograms. Stochs are inside the bullish control zone. Overall, it looks good. But it's very important that we understand the distinction between what this is telling us and how it's calculated, because it can be, I don't want to say manipulated, but the way that it is calculated can be deceitful.